Alright, so just did another small scalp um using the dollar. So um I initially wanted a short, right? Because I know we all saw those lows being targeted. But price really just expanded, and I didn't take the 930 retrace. I didn't take that. And I didn't take this one into this little gap, these little taps. So because I don't really have a stop entry model based on fair value gaps yet. Like, I'm not comfortable with using fair value gaps as my stop, so I didn't use it. What I did do is I saw that since the dollar was expanding, I was like, okay, if the dollar is going to keep going higher, we're going to keep going lower. But it should have some form of retrace if we go higher, right? That's just what I assume, because I always want price to have some form of retrace instead of just rocketing away. So I'm glad I protected, because that definitely would have came back and stopped me out at break even. So I got another 5 points. See, that was the only trade I took for the day. The last trade was the 30th. This was that. But yeah, so I was like, I wanted to see a high time frame retrace. So while we came out here, and this dotted line was one of many dotted lines of like a liquidity pool that I wanted us to hit. Like, see, that was this low. So I basically had like majority of the swing lows as we were coming down as areas, because if price is gonna go lower, it's gonna keep seeking out lows. Ultimately, I wanted to come to 37.41, but I figured I could get some form of scalps in. Oh, excuse me. Before that target hit. So yeah, that run up was basically to retrace, or playing the retrace into this 5-minute gap, or 5-minute fair value gap. And then lower time frame, I took this run above this high as a shift in market structure. Why did I do that? Okay, so still a learning process, but I saw us, trade down, trade down, trade down. Then we created this swing low, right? This swing low right here. Then we traded up from it, and then we came back down and swept it, right? That's a lower high, or a lower low. I'm sorry, Jesus Christ. This is a lower low from this, right? So it swept this, and then we had expansion higher that created a gap that took out this high. Right now, this wasn't really like the best form of displacement, and I probably wouldn't have taken this before, like without using a dollar. But at the same time this formation was happening, the dollar, yeah, so the dollar like basically consolidated and then ran above these highs, so there's clearing buy side liquidity, and then broke down. So it created this, well, I'm on a 1 minute, but it's actually a 2 minute. Yeah, it created this basically like 2-minute miniature sell model, right? And the thinking I have is high time frame retraces are lower time frame models. So high time frame being like the 15-minute. Matter of fact, let me just go on it. 15-minute. See like how we ran up and then created this gap, and now we like came back down into the gap. Because all the dollar's been doing has been following market structure. Like, it's just been all those yellow lines, that's market structure lines. So it's literally just been retracing into structure. Boom, here, boom, retracing to that, break that, come back to this high, breaker, boom, touch that, boom, this one, boom, touch that, then it expanded away, and then it came back to this one, boom, that one right there, and then this one, it came into that one, boom, that one right there, and then this one, it just expanded higher. And now we finally come back to another bullish OB, right? So if market structure were to hold, and if the dollar were to continue going higher, to make our, or my, I don't want to put that on y'all, but my target hit, then it would basically be reset this, run away, retrace, so RTO, and then continue higher into the gap and above this. That's if you want higher. If it's lower, then it would be we hit this just to retrace into this gap, and then to continue falling to take out these lows, these gaps here, and then hit this order block, and then we see if it holds there. So, but seeing that low time frame model and the expansion lower, it was expanding lower, but the ES wasn't moving yet. So I was like, okay, there is a lag here, and it seems like I'm just, this is my observations, but it seems like the dollar is quicker to move than the ES. Like the dollar would move first, and then the ES would move. I don't know if that's just placebo, if how I'm perceiving it, but that's what I've seen. So while that was happening, I just looked at the ES for some form of bullish lower time frame entry, and I based it, off of this candle here, this one right here. This, because we had a low, and then we had a high, and then we had a lower low, and then we had a higher high, where this candle closed above it. Now, was this like the follow through in price that I want to see? Again, no, but I saw it as something, so I just took off the body of it. I entered basically off the body, and then it also had this little gap, probably like a point or something. Okay, 1.75. And now with tiny gaps like this, I don't really care to have like the bottom gap entry, because if it misses you, right, like this move, this little short move, if this was a scalp you're willing to take, if it misses you on this, and you're like, damn, it missed me by a point and 75 point, 1.75, like, oh, this sucks. But if it's a gap that small, who cares about the 1.75 like drawdown? Like that's how I think of it. Like if the gap is too small, I'm not trying to get like the bottom of it. I'll just take the top, because if it draws down, oh no, I'm down 1.75 points. Oh no, like, so that's what I did. I took that, and my stop was below this low. Wait, I can't show you. It was below this low right here. It was below that low, because that was the lower low in this small scenario, right? This small scalp, because I wasn't really looking to hold this for some extrapolated move, because again, I want us to come down here. So any up moves, and high time frame is pointing down, so any up moves that I'm taking is counter trading. So that's why the target was like 5-6 points, especially when I saw that we did that breaker formation and then ran up, and then this candle stopped right here with this candle to create these equal highs. Wait, let me draw it so you can see. Wait, I gotta put the magnet back on. That's not a magnet. Alright, I need this and then this. See, those are perfect. Those are clean equal highs in a bearish trend. So I was like, price is probably gonna sweep that, and then add all that in with the dollar confirmation that I had, and then this breaker pattern, and then this little gap. I was like, yeah, I'll take that. I'll take this and just have my stop below that low. Then it picked me up here, and then when it started expanding higher, I moved my stop to break even, and then again it poked above here, and I just protected at those highs, because I was like, if it swept those highs, then it's probably coming down lower, because it already took the stops that it needed. So that's what that was. I don't think I need to show the executions, but I'll just do it, just if it matters. Is it even gonna show? Okay, give me a sec. I gotta pop. Okay, so just to got that, sold that. That's just that. That's all that is. But I think that's all I have. I was considering taking this live, but the premiums, I didn't really like the price they were being offered at. And I really want to like focus on futures trading, because a scalp like this there's like no time decay, there's none of that, and you'll always make like the exact set amount every time. Like one contract 5 points is the same value all the time, compared to options where I'm like, oh, I got theta, I got delta, I got the landlord. Like, there's so much that you have to deal with. So I'm thinking I might just use options for like leaps or shares, or just shares or something. I want to go full-time futures soon, because this is comfortable. Like, This is great. Like, actually, let me compare what the option prices were at this time. So that was a short call scalp, right? That's what that would be. I got in at 947. So at 947, the premium was, what was that? For a 376 call, that was at like, what was that there? Like 125. So 125. And then to sell above that. Okay, so that'd be like a short, like 20% scalp on premium, which is fine because it's not even after 11 yet. So Theta hasn't really had any time to Pac-Man its way through your money. But I think I'm more comfortable with futures. I'm not gonna lie. But I'm rambling now. That's all I have. Okay, so you see that? Yeah, that was. Damn, I'm talking, and I did the trade, but like, but this breaker though, like, you know what I'm saying? Respect it. Look at that. Don't worry about the wicks. Wicks will always do that. Wicks will always reach and grab and poke. The bodies is what you're looking at. The bodies close in and then we expand it lower. Below this low. Like that would have been another scalp. Like low hanging fruit. These equal lows. Retrace up into the breaker. You ran some form of buy side liquidity and then take that. This right here, this down is basically what I took on this up. Like this is just the down version of it. But I'm done. I'm out. I don't need no more trades. That's all I got. Bye.